Bitcoin and cryptocurrency prices struggled to find direction in June after moving sharply lower through April and May. The Bitcoin price, down almost 50% from its peak of around $65,000 per Bitcoin set in April, has managed to hold above the closely watched $30,000 level, but has failed to make convincing gains. Now, with around $1.5 billion worth of shares in the Grayscale Bitcoin Trust, GBTC, hitting the market on July 18, something JP Morgan named as a downside risk for the Bitcoin price, researchers at U.S. crypto exchange Kraken have predicted the looming Grayscale unlock could be positive for the Bitcoin price. Sign up now for Crypto Codex, a free, daily newsletter for the crypto curious that explains the world of Bitcoin with brevity. Arriving in your inbox at 7 a.m. Eastern Daylight Saving Time every weekday. Grayscale, the world's largest digital asset fund manager with $24 billion under management, allows institutional investors to gain exposure to Bitcoin through shares in its Grayscale Bitcoin Trust, GBTC, a fund that currently holds just over 650,000 Bitcoin tokens, some 3% of Bitcoin's circulating supply. GBTC shares are subject to a 6-month lockup after being purchased. Despite one being a single asset fund of the other, Bitcoin and GBTC are two distinct assets with different forces influencing their respective prices, Pete Humiston, manager of Kraken Intelligence, said in emailed comments alongside Kraken's latest market recap report. While we don't anticipate the unlock window to have any major market impact, the trading strategies commonly used by institutional investors leads us to conclude that the event could be mildly positive for the Bitcoin price. Large institutions make up a sizable proportion of the GBTC owners who'll have their shares unlocked this month, according to Kraken Intelligence, pointing to recent Securities and Exchange Commission (SEC) filings. These institutions are thought to have bought GBTC shares with Bitcoin to harvest the premium to net asset value that GBTC was trading at, and to do so may have shorted, or bet against, Bitcoin to avoid being impacted by price volatility. As a result, if these institutions did cash out their GBTC shares, they may have to buy Bitcoin from the spot market to cover their GBTC hedge. The complexity and duration relating to repositioning in the market amidst the GBTC share unlock is not black and white, the Kraken Intelligence report read. On its own, it's not likely significant enough to immediately impact Bitcoin's price like some claim. Crypto Codex, a free, daily newsletter for the crypto curious, helping you understand the world of Bitcoin and crypto. Every day last month, JP Morgan analysts predicted the Bitcoin price could fall as low as $23,000 per Bitcoin before finding a floor, pointing to the GBTC unlock as a potential risk. Selling of GBTC shares exiting the 6-month lockup period during June and July has emerged as an additional headwind for Bitcoin, JP Morgan analysts wrote in a June note.